This is Matt Carbray from Ridgeline Financial Partners, and thanks for joining us. This is Matt on Money, which is our monthly podcast, and we're going to do things a little bit different this month. We actually put out something on social media to try and find out what's important to you. Now, we try and cover topics that we feel are timely, but we received some really good questions, and they all are covering different topics. Some are more tax-driven, given the change in the tax legislation going back to 2018 for our small business owner clients. Another one has to do with basic estate planning and the documents that you need or should have. And then the last one actually has to do with long-term care insurance and the relevancy of that, when you should start thinking about it, the different forms of long-term care insurance. So please join us for this month's podcast. Thanks for joining. Let's jump right in. First question. When do I need a will? And can you tell me, Matt, the basic estate planning documents that are the foundation of an estate plan? Well, estate planning is something that almost everyone needs to do something about. If you own any sort of assets, if you're married and you have children, you start to think about estate planning for the first time. And I think that's an ideal time to start thinking about it because, unfortunately, without a will, sometimes your intentions may not necessarily be met. So I would make the recommendation that you should get a will if you have any sort of property that you want to pass to a designated individual. That could be anything from a piece of real estate. You could be just out of school. You may not yet be married, but you have a property that you own and you want to make sure that that property or the proceeds of that property ultimately go to the correct person. In the case of children, that's when you start thinking about guardianship. Who do you want to be the guardian of your children? And that's a very difficult concept to think about, especially the younger that you are. And having minor children is, if something were to happen to you and or a significant other, who's the responsible party to take care of those children? A byproduct of that is, well, what happens if you and or your significant other pass away and you have minor children and you have retirement accounts and you have life insurance and you have property? What do you want to have happen with those assets? And does it possibly make sense? And I would make the argument that it may, that you should think about having some form of a trust. The common trust that most people use is what's called a revocable trust or a family trust, where you can direct that your assets flow into that particular instrument. You can determine who the trustee or trustees are, and then you can establish parameters by which those assets can be spent for the benefit of your minor children. And when they eventually become adults, how those assets will be distributed. So those are some of the basic documents, but a document that everyone should have is something called the healthcare power of attorney. It also could be called a healthcare proxy. And that's something that would dictate to a medical professional and or your named, trustees, for lack of a better word, as to what you want to have happen. If you were in a position where you needed to be kept alive on life support and you may not want that, well, you would have to clearly state that in that healthcare directive. So that is a document that everyone at an absolute minimum should have. And I will further go on to say that you should maintain a copy with the individual who you are giving that power to, and also to whoever your primary care physician. The last document, which can take many different forms, is what's called a power of attorney, which would allow someone to step in and handle certain affairs for you. One of those that's very common is to be able to sell a piece of property, to be able to sign off on checks, to be able to transact business in an investment account. But one that I feel is often overlooked when it comes to power of attorney in this day and age is social media. I mean, what we're on right now, your digital footprint. With a lot of these social media providers, unless it's clearly stated in the power of attorney that you're granting someone that authority, they may not be able in a position to act on your Facebook, your Twitter, your Instagram, where you may want those to be shut down and not have individuals continue to be posting items on those various different mediums. So those are some of the basic estate planning documents that I think have relevancy for a majority of people as your situation evolves, as you accumulate more wealth. then those documents can get a little bit more complex. But I think that's a great place to start. And the best thing to do is to get in touch with a specialized estate planning attorney and to have that individual work in conjunction with your financial professional. Okay, from our audience, our second question, does long-term care make sense for me? I'm trying to determine whether long-term care insurance is something I should look into. What is the timing and appropriateness of this type of insurance? Long-term care insurance is a newer form of insurance comparative to life insurance and disability insurance, but at its root is the benefit of providing for monetary resources to be able to offset the cost of in-home or in-facility care. There are all different types of policies, but at its core is trying to protect against the risk that you are going to have a major financial outlay to care for you or another at some stage of your life. Now, the odds are staggering that the average person, there's a 50% probability from age 65 until life expectancy that you will need some form of care. In the state of Connecticut, which is a very expensive state for a lot of different things, it is especially expensive when you look at long-term care costs. It's not out of question for the cost per month to be $15,000 a month to be in a facility. If you are fortunate enough to be in your own home, you may be able to get off for about half of that, depending on whether it's around-the-clock care. But you're talking about a significant cost, and the impact that that can have on your wealth and on your surviving spouse and your kids, for that matter, cannot be understated. An indirect cost that most people don't think about, and I've seen this in my own family situation, is caring for loved ones and what that indirect cost, the inability to work, the inability to take care of your own current lifestyle needs. So long-term care is something that we believe strongly in. The timing of when you should think about getting a long-term care policy, the earlier the better. Like all forms of insurance, the older you get, the more expensive that it can be, and your insurability, your ability to get approved by an insurance company, more likely than not, gets worse over the course of time. So in your early 50s is when we are recommending people to start looking into this. If you are a business owner, there could be some tax benefits associated with getting insurance and purchasing it through your business, depending on the type of entity that you are. And then the appropriateness, well, it sometimes can be driven by, okay, I have X amount of assets and I therefore want to protect it. I don't like to generalize here because the decision to get long-term care is partially to avoid the financial impact, but the indirect purpose of long-term care is so that you don't have to inconvenience the lives of your family members and your spouse, if that is in fact relevant. So long-term care, get that discussion going early, research your options, understand that there are all different forms of long-term care, but it's important to seek advice from someone who specializes in that form of insurance. Okay, last question, small business forms of ownership and the recent tax legislation's impact on pass-through entities. Wow, that was a lot. What I'm going to first say is my disclaimer is tax advice should be given by your tax professional. We do work a lot with tax professionals. The type of business entity that makes the most sense for you could be different than your neighbor who has a different type of a business. Some of it is industry dependent. Some of it has to do with the structure, the amount of employees you have, the anticipated revenue or net income that the entity is going to derive, and then what your plans may be in the future in terms of your succession. So the tax legislation that was passed in 2018 was monumental. And there was a lot of positive in there about small businesses, specifically pass-through entities. One of the pieces of legislation is referred to as Section 199A, which also is referred to as the qualified business income deduction. That we are finding is having a profound effect on the amount of taxes that individuals are paying in a very good way. It is resulting in sizable deductions that didn't otherwise exist. So do you qualify for Section 199A is really the first place to start. And the IRS has expanded on the definition of who's considered a qualified business and who's considered to be a non-qualified business, and that does not meet the qualifications. Certain professions such as financial services, accounting, and legal may not be able to take advantage, but other businesses such as manufacturing or distribution may be a candidate that is allowed to take advantage of it. So I will say this to you. Get in touch with your CPA, run a couple of different examples as to how it affects you, whether you remain in your form of business, which not uncommonly for most self-employed people is a sole proprietor or a single member LLC. See if the S-Corp structure may make more sense for you. But the pass-through entities and the Section 199A benefit is likely to help you if you meet certain qualifications. So thanks so much for tuning in. We appreciate your questions. We look forward to another upcoming topic next month. But please feel free to reach out to us via email. Email address is Matt with 2 T's at Ridgeline, F as in Frank, P as in Paul.com. Thanks again. This has been Matt on Money. We'll see you next month.